Welcome back to the channel. This is Alex. And in this video, we're going to do some TA on all the major indexes, the S&P 500, QQQ, Bitcoin, gold. And also, I'm going to show you guys some stats from my proprietary market monitor that lets me peer into the market and see where we're going to go next. If that's what you're into, stick around. All right, so what you're looking at here is ticker symbol IBIT, the Bitcoin ETF. And as you can see from previous videos, I drew some of these lines in here, support and resistance in this kind of range, this flag we were in for the better part of the last month and July. And so what we do in this channel is we do Wyckoff analysis, technical analysis to see, whether things are acting right or whether things are acting abnormal. And one thing that we were talking about on Bitcoin was we were bullish on Bitcoin as it was above this candle here, because as it broke this previous high, we said that, okay, most of the people got out or went short on this candle here. So if the market would stay above that candle, it's kind of like the point of control candle, we would stay bullish. And then from there, we kind of were doing some TA on this range, saying like, okay, this is the top end of the range and this is the bottom end of the range. And we had some undercuts in Wyckoff. Whenever we undercut the range and come back in, that's called a spring. Whenever we overcome the range and come back in, that's called a upthrust. And I believe on last week's video, we were saying like, okay, this upthrust, okay, because this is a gap, we kind of connect it from the previous close. So this giant candle right here was much stronger than the spring action from the low end of the range. So it was turning bearish from this candle right here because of that relationship, the difference between exiting the range, re-entering with this kind of strength, okay, and exiting the range and re-entering it with this kind of strength, okay. Notice we had a bigger candle, better follow through, smaller candle went sideways for 3 days. So it became a little bit more bearish last week. But we still said, okay, it is becoming a little bit more bearish. What we'd want to see is maybe it undercuts the range and springs again. And you know what? We got that, okay, with Powell on Friday. But this candle today is, I believe it's extremely bearish because we had a spring, we had a strong bodied candle, and we literally gapped the whole range of the candle and nullified it and broke the structure. So I would actually lean, okay, this thing needs much, much more time. Maybe it's going to test this range right here that it was in for a long time. This kind of candle is pretty unfortunate for Bitcoin. So instead of having a bullish view on Bitcoin, we would turn to a more neutral kind of tune here. So yeah, that's all I basically see on Bitcoin. Let's move on to the S&P 500. Okay, so what you're looking at here is the S&P 500, ticker symbol SPY. And yeah, so we were, we had this nice up wave coming down, this kind of a candle where it undercut. This is the anchored VWAP from the last Fed meeting. And then this was the jobs report. So I just basically put an anchored VWAP. For those of you who don't know what an anchored VWAP, it's basically just a volume weighted average price. So it just tells you the average price that everybody has paid up to this point. And, typically people, add to positions when they hit their cost basis or what have you. So it's just an important, line in the sand. And we had this kind of bearish candle, but then it reversed, making it kind of a rally day, a strong candle, nice follow through with last week, when Powell came out. But then I'm noticing like these strong candles and lack of follow through. And you can also relate it to Bitcoin. If Bitcoin didn't follow through and it really undercut Friday's, low, that tells you something, because that's a leading indicator, I believe, that there's some weakness developing in this market. Now you can compare like this wave right here to this one right here, and obviously this one's a little bit stronger. So you would expect this thing, if this is a reaction and it's a stronger reaction, that we would continue strength and continue onwards. But the fact that it didn't today, with the weekend especially, to think about it, I would actually draw a line in the sand at halfway up this candle as kind of like, okay, if it stays above this candle, it's going to be bullish. But if it breaks down, you could see it break pretty quickly here, and head towards this quarterly moving average and these other ranges that we drew over here. Okay, so that's what I see on S&P 500. Let's go to the NASDAQ with the QQQ. So this is the QQQ index. I've done a lot of TA on this, and that's why you see all these lines. But one thing I want to show you guys this week is basically this bull market line that I drew from the onset of this trend, how we're back inside of it, this little range here. And the QQQ is a leading index. So whenever we see a leading index show more weakness, okay, versus the S&P 500, okay, that's we just okay, that's turning bearish. Bitcoin is turning bearish. But now the QQQ today was down a little bit. Was it down a little bit less? Yeah, it was down a little bit less than the S&P 500. So hey, that's a little bit more bullish. But this reaction, okay, was quite similar, okay, to this one. And then if we notice this bounce, okay, it's a little bit weaker, okay, versus this, where it undercut out of here and it gapped up and it, erased all the losses, okay. Whereas this thing, okay, it took 2 days instead of 1 day, okay. But they did come in and they did support the stock, or the index here, okay. They bought again, and you can see it in the wick, and the volume signature here. But the lack of follow through versus this kind of a candle is noticeable, right? So, and we're right here at this anchor view app from the last time Powell spoke. So it's just at a very interesting level, where it could turn bearish. And if we break out of this, I would expect it, to go back to this quarterly moving average. It would turn less bullish. It would be more of a neutral kind of a thing. So that's the QQQ. So let's move on to GLD. So GLD, I was making the case that it was actually bullish. We've been in this range for a little while now. We did the same thing as in Bitcoin, whereas like, this candle right here, where is it? This one. Yeah, basically like these candles right here are the bullish lines in the sand, maybe like this one, where it needs to stay above here to stay bullish, and it is. And then we had another range similar to Bitcoin, but this thing has been going sideways much longer. But all throughout this range, they've been supporting it at the lows, right? They supported it here at the low here. They supported it. Actually, no, they sold it at the top here. And then, sometimes they're coming. Oh no, that's at the low, and then this is at the top. So, when you look at it, how many volume spikes there are at the low versus how many volume spikes are at the high. You basically see about one volume spike at the high. Maybe this one too. And this, but there's not that much, okay? And then this one. Okay, but this is actually above the anchored VWAP from the Fed day. I think I was making the case where we bounced up to this top end of this range. And this is kind of similar action to what I was saying in Bitcoin, where you can compare the previous kind of springs to the previous up thrusts and vice versa. So this little reaction here that we're seeing off of this spring is actually stronger than this one, right? Oops. Yeah. It's this little reaction, okay? And they're kind of accumulating it here. As you can see, the volatility is kind of crushed compared to in here, right? So the volatility is compacting. This reaction here is much stronger than this one, much stronger than this one, much stronger than this one. So actually, gold looks pretty good. It looks primed to continue higher. So with that, yeah, if you guys stuck around for this much of the video, thank you guys so much. I'm going to go on to my proprietary little market monitor, and show you guys some internals and see if that confirms the TA that I've laid out so far in the video. And hey, if you guys like the content so far, feel free to smash that like button, and stick around. All right, so for those of you who are new, the market monitor is essentially a collection of data I've taken over time, and it basically just tells me what to do, whether to buy, sell, or hold on a kind of shorter to intermediate term basis. I track the market via cycles, similar to the William O'Neill method. And in this section, I'll go over the cycle analysis. I'll go over the stage analysis, where stocks are, and then some market internals. So let's start with some cycle analysis. So currently we are in Market Monitor Orange. And Market Monitor Orange basically just means after a decline, we're going sideways on a short term basis. And we are day one, and we've gone negative 0.43%. And the average orange cycle lasts about 4.8 days, and it goes negative 1.15%. Now, every time we go into an orange cycle, we're on the lookout for a green cycle, which comes after it, or in rare occasions, it does undercut the lows and goes back into red. So, with that, let's go over to the stage analysis. So, as you can see here, I have the columns 1, 2, 3, 4. This is basically just the where the stock is, whether it's an uptrend, downtrend, so stage 2 and stage 4, or sideways after a downtrend or sideways after an uptrend, which is 1 and 3. Yeah, and as you can see, I mean, I basically take the average 16 periods of these stage calculations, and it just tells me the stage momentum. And right now we are in a bullish momentum phase. So we have 63% of stocks versus the average 54, and then the other ones are negative. And as you can see, like Friday, we had a big decrease in stage 4 stocks, but today it kind of they came back. So a lot of stocks that were very bullish yesterday, which is kind of typical whenever you have this big move in these small caps. Uh, Small caps typically move in these little bursts where just you get a lot of gains in one day and then they give it all back. So we're gonna just monitor if they're gonna give it all back again. Okay, so with that, let's go on to some internals. Okay, so as you could see in this picture, I track a lot of different internals. Pretty much just go left to right here. Starting with X21, which is these are just distances from moving averages, exponential moving average, so the 21 day and the 10 day, and we are above those, and that's a nothing burger, nothing to see there. This DD column is the drawdown that we're in, so we're only 0.67 off the highs, nothing to see there. The trend indicator is basically, you know, uh, whether the volume is going into the bid or into the ask or advancing versus declining issues. And it's coming off of 1, but it's been above 1 for quite some time. That's why I'm also getting a little bit more bearish, a little bit more intermediate to longer term, because you typically see they're starting to distribute at the highs here. But distribution takes some time. So moving onwards, the put call ratio, nothing to see there. The VIX is at 14, and that's spot. But if we go out to September, it's still a little higher. So uh, you know, uh, so it's not that low. And then the correlation index peaked a little bit, and it's back to a bullish environment. Nothing to see in the 20% bullish or bearish. That's number of stocks that have made 20% moves in 5 days. Higher lows, nothing to see there. And then bearish, this is number of stocks that are ending at the low of the day versus the high of the day, bear C or bull C. So we had a lot of stocks ending at the lows of the day today. So moving on to more market internals, more of like overbought, oversold indicators. So this BB45 is just number of stocks that are above their 45-day Bollinger Bands, and that's we were a little bit overbought, especially on Friday, and then now today again. And wow, so on Friday we had 132 stocks that made 5% moves on big volume. That's a big number. You want to typically see those numbers at the beginning of bullish markets. Like that's a very big number, but the fact that we're already at all-time highs, uh, potentially climactic action, we'll monitor that. So this STMU and STMD, this is short-term, basically 5-period moving average versus 21-period moving average, and we are in a new up wave. As you can see here, we were in a down wave, but now it's going back to a bullish wave with 175 stocks, and then this TD cell, nothing to see there. This is a little bit overbought, but that can stay here for a long time. That's just how markets work. It can stay overbought a lot longer than say an oversold indicator. And then the anxiety index, which measures whether how investors are are actively selling or buying and moving a lot. And we were getting a little complacent, but now we picked it up again back to over 20,000. And then lastly, this 63p basically just tracks stage one stocks and stage two stocks, and that's above 70%. So that's bullish as well. And then this long-term momentum, I was talking about that in previous videos that I was worried it was getting to below zero. So it could either do two things. We could push us into a long-term bear market, or it would be more steam for us to bounce. And it seems like the latter is happening, where the small caps are rallying. Yeah, and so that's about it for the Market Monitor segment. So hey, if you guys enjoyed the video, thank you guys so much for stopping by, and I'll see you guys on the next video. Cheers.